Hey everybody! In this video, I'm going to talk to you about the differences between fixed rates and variable rates. I'm going to give you a few pros and cons and help maybe in making your decision on the type of mortgage you want to get. Stay tuned! Hi there, my name is Tracy Goodwin and I'm a realtor here in Chilliwack, BC. I've been selling real estate for a long time, almost a decade out here, and I work with Century 21 Creekside Realty. If at any time you have any questions throughout the video, put them in the comments below, or you can reach me at 604-997-6505, or you can email me anytime too at tracygoodwinrealtor@gmail.com. So I think the big question right now is what is going to happen to rates? As we already know, the Bank of Canada held steady in January and didn't have any rate increases, but they're hinting strongly that at the beginning of March there will be an increase. And the question a lot of people are asking when they're getting into a mortgage is, should I go into a fixed 5-year rate or should I do a variable term? And that's never totally crystal clear, and you have to make decisions as to, how you're going to sleep at night. Here are some reasons why, though, you may want to look at a variable rate as opposed to a fixed. Right now, there's currently a 1.5 to 1.75% difference between fixed and variable rates. And this is much larger than we, have normally seen in the past. So some economists are predicting by the end of the year that this gap will become a lot smaller. But I'm highly doubtful. And here's why. Because number one, the government debt right now are at record high levels. So each rate hike is going to impact the economy, and everything is going to be scrutinized underneath a magnifying glass. And it also takes time to see the effects after each hike takes place. And secondly, with our inflation being less than that of the United States right now, I think, and I'm hopeful also, that there will be fewer hikes than the Bank of Canada thinks is required to bring our inflation back to the target levels, especially if supply catches up with demand, as it looks like that's happening in the real estate market right now. There should be something left between the gap of a fixed and a variable rate mortgage by the end of the year. There still will be that gap. And if there isn't, many believe there's going to be a recession. And that will be the outcome. And then we'll see rate cuts, which will follow shortly after that. So a 5-year fixed mortgage, it certainly has its appeal. Knowing your payments for the next 5 years in this type of economy can be very, certainly relieve some stress, right? But interest rate hikes come with a cost. They come with a premium. And along with that, your fixed rate could be more expensive over time. So if you go down with fixed, then make very certain that your contract doesn't come with back-breaking penalties, which will likely prevent you from refinancing if the rates go up. So in summary, the 5-year Government of Canada bond yields followed their USA equivalents higher last week, and that has started another round of 5-year fixed rate increases. Variable rates are still likely to head higher at the next Bank of Canada meeting on March the 2nd of this year, coming up here in a couple weeks. So stay tuned and keep an eye on the mortgage rates. Each institution has different penalties and terms with their mortgages, so just pay attention to the details. Okay? Thanks for watching, and please reach out anytime. You can call me 604-997-6505, or again, email tracygoodwinrealtor@gmail.com. Please give this video a thumbs up if you liked it, and subscribe to my channel And yeah, put some comments in below. I'd love to hear from you.